Peter Schiff is right about gold. And that is exactly why I own Bitcoin. So let me explain before you close this video. For 5,000 years, gold has answered one question really for society, which is how do I protect what I have earned from everybody else, from governments, banks, and time? And by the end of this video, you're going to have a framework I would use to split a portfolio between the two different assets I'm about to talk about. And if you're new here, my name is Frank. I'm a crypto attorney who's advised some of the leading crypto exchanges on what they could legally list and sell to you as their user. Now, I've 11x'd my own crypto portfolio, and today I'm CEO of this company called New Market Trading. It's an on-chain wealth management company. We have 11 hedge fund managers. They consult on 9 figures of crypto capital. We're a pretty good team. Now, gold is pretty great. Gold has outlived every empire, every economy. It has been a de facto store of value denominator for trade for arguably 10,000 years now. And it has a bunch of attributes that everybody loves it for, which is that it is scarce. It has a unique chemical property. It is malleable, and it has something of a strange allure that at this point has evolved into our species, that across literally millennia, when a human sees gold, they have an innate reaction to that metal. Now, gold is scarce. It is universally acceptable, but it has some limitations. So gold is really tough to transport. And of course, you could hold gold in an ETF, but if it comes the day where we're having issues with our financial system or issues with surveillance, then a gold ETF isn't going to cut it. You want to be holding that gold physically in your hand, which is why many people do that. But if you want to change where you live and take that gold with you, well, then that's a problem as well. Most airports don't let you do that. If you try to do it, you need to willingly submit yourself to the surveillance and control that you're trying to avoid by having gold in the first place. Gold is also not very divisible. So if you have an ingot of gold or a bar of gold and you only want to buy or trade for a small amount of things, then having a whole bar of gold isn't very useful to you. You have to get an assayer in, is the term, to divide up and measure the quality of that gold so that you can do trade with somebody else who wants your gold. Now, that of course takes us to digital gold, which is what me and my company specialize in. So Bitcoin is called digital gold because Bitcoin has a lot of the same attributes as gold. So the primary two is that it is scarce and people trust it. People trust gold because it's been around. People know that it's scarce and that if we can't just snap our fingers and add a lot of gold into the economy out of nowhere. There's the whole gold mining industry. If you want them to accelerate the digging of the gold, it's going to cost billions of dollars. And the economy just trusts that we're not going to have an abundance of gold just flood our economy out of nowhere. People feel the same way about Bitcoin. You maybe know that there are these Bitcoin miners around the world that are spending hundreds of billions of dollars on power that do two things. The thing number one is that it mines new Bitcoin from the Bitcoin network itself. And that power also at the same time acts as a security mechanism that prevents that network from being attacked by somebody who hates Bitcoin, like the US government or Chinese government or any government basically. So that's why so much power is consumed. It's actually a security feature because in order to take over the network, the US government or the Chinese government or whoever would need to expend all of that power to only destroy the network. So it'd be a multi-$100 billion attack and sacrifice for no gain, purely just to destroy Bitcoin. And so that's the mechanism behind the Bitcoin network. It's why Bitcoin is so scarce, because you need to use so much power to mine new Bitcoin. And it's why people trust the network, because they understand the financials and the economics. And the technical term is like Byzantine fault tolerant characteristic, BFT, characteristic of the Bitcoin network. So Bitcoin has advantages that gold doesn't as well. And this is why many people forecast that the Bitcoin market cap, which is currently $2 trillion versus gold's $25 trillion, so like less than 1/10 the size of gold, many people forecast that Bitcoin, and myself included, will eventually surpass the market cap of gold. The reason they think that is because in a digital economy, Bitcoin is almost superior than gold. It is superior than gold. Not only is it scarce and everybody trusts it like gold, but it's also transportable. I can have $100 million worth of Bitcoin on me right now, and I could jump in a plane, and I could go to any other country, and as long as I have the right software and hardware to access that Bitcoin, which is simply a computer or a hardware device, a ledger key, then I can access that Bitcoin. It'd be risky to do it that way, but it's possible. Whereas I can't take $100 billion worth of gold on my back. Bitcoin is also easily divisible. And so even if I have 100 billion Bitcoin, it is no problem at all for me to send you 1 penny's worth of Bitcoin as long as I have my computer. But if I've got one big gold bar worth $100,000 and I want to give you $8 worth or $10 worth of gold, it's very difficult to do that. So it's not very good for that purpose either. Bitcoin is also acceptable by anybody anywhere who has an internet connection, which again is not true for somebody who is looking to accept or send gold. Now, some of you watching will very reasonably point out that gold doesn't have 70% drawdowns every few years. And that's totally correct. It doesn't. But what we can see from Bitcoin is that because it has characteristics of gold and is year after year moving closer in line with a hedged asset than it did the year previous, we can forecast that because it has the attributes that gold has that makes gold so valuable, and it has those attributes and more competitive attributes. And we can also say that gold's been around for 10,000 years. Bitcoin's been around for 15 years and it's already 10% the market cap of gold. It is no stretch of the imagination to say that the Bitcoin market cap will eventually surpass the market cap of gold, which I do believe. So this volatility reflects the nature that this is an asymmetric hedge. It's a hedge because it has the attributes of a hedge, of real estate, of gold, or name any other hedge. But Bitcoin is also asymmetric in that the potential upside is still so significant because it could and should, and in my opinion will, exceed the market cap of gold. So a 10x plus return for Bitcoin in the future ahead. But it still has this, who knows, who's actually sure aspect to it. It's so new. It's only 15 years old. It's digital. It doesn't have a 10,000-year-old history. And so it is going up and to the right in the long term, and it's going to continue that trajectory. But the emotions of this market who are trying to gauge how realistic that return is making this asset class and this asset so volatile. And so it's a very fair criticism to say that while Bitcoin has some attributes of gold, right now it's not performing like gold. And that's very fair. Now, if you want to understand something about how we work over here, I thought you'd find it interesting to know that pretty much all of our client portfolios have Bitcoin in them. Now, if you're curious about how this company works, you can click the link below. The quick intro is that you're going to use a hardware wallet to open up a smart contract on the blockchain. Our platform helps you do that. You deposit crypto into it and then delegate management permissions to my team. So we don't ever have withdrawal capabilities with your crypto. We can only connect your crypto to whitelisted assets and protocols, the stuff that is industry standard. But you don't need to do anything. You get custody, we take the management job. New Market Trading is the name. You can click the link below to find out more. One thing we will tell our clients who are asking us about the intersection of gold and Bitcoin is that actually you can have both and should have both in your overall portfolio. We are all in New Market Trading very big proponents of do not sell the house, do not sell the equities, do not sell the gold, and put it all into crypto. Crypto is a part of your portfolio. Bitcoin is a part of your portfolio, and so is gold. And so actually, the allocation between the two is a little bit dependent on you and where you are in your, it's actually very dependent on you and where you are in your life. But Bitcoin and gold both belong in your portfolio. Bitcoin and gold are at different stages of their maturation. And so while they are both hedges and should be invested into from the perspective of a hedge, Bitcoin has this early stage venture capital, tech, asymmetry vibe to it, which means that it is going to return you more than gold in the long run. But there is going to be more volatility as the market, which is of different sophistication levels, adjust their portfolio to the still volatile nature of Bitcoin. And so what I would say is if you sleep better with gold, then just own some gold. I will always have assets in my portfolio that I feel good about and can defend. What I don't want you to think is that this choice is binary between Bitcoin and gold. And I also don't want you to think that either one is risk-free. We've actually seen gold have a very large drawdown over the past year and a half that is very uncharacteristic for that asset. But these are the fairly unique fiscal monetary times we're in. What I'm saying here isn't financial advice. You can see it's quite abstract. It's more so a thought process that I'm explaining to you. If you're watching this and you've made it this far in this video, I know you're going to be interested about the dynamic between the old and the new, or about new market trading. And if you want to learn more about how we think about this asset class, about what my team does all day, these guys are crypto hedge fund managers, these guys are protocol builders. One guy in my team built a protocol with $2 billion worth of crypto assets in his protocol. These are guys with 7-figure personal portfolios. If you want to work with guys like this one-on-one and see how we think and how we actually manage crypto capital on the blockchain level, if all of that is you, then click the link in the description below. Book a time, talk to us, see if what we do over here is a fit for you. Regardless, subscribe to stay in the loop on everything crypto, and I'll see you in the next one.